And so as I thought about that, it's like, man, even in crypto, there's, thousands of tokens. But really, like for me, I'm trying to find high quality protocols that I think have great management teams or founders that ultimately have tokens that can generate value or have a reason to, exist and thrive over the long term.
This episode is brought to you by BitGo, which is a top-tier crypto custodian that has been in the industry since 2013. It's headed up by Mike Belshe, who's a Web 1.0 and 2.0 legend. BitGo provides incredible services in addition to custody. They allow you to manage your tokens, get all types of liquidity, and much more. And some of the companies that use BitGo include Bitstamp Exchange, SWI, the token project, Pantera Capital, that's Dan Morehead, as well as 21 Shares, which issues Bitcoin and Ethereum ETFs. Some of the great services that BitGo provides includes wallet services, which is secure, trusted, scalable wallet solutions. Prime services, which allows you to get seamless access to liquidity and capital. It also allows you to list, manage, and grow your ecosystem. And they have what's called the Go Network, which is a secure real-time global settlement. Recently, BitGo launched a retail platform that allows you to trade, stake, and of course, custody your crypto assets. And this is a great solution because it provides you with top tier crypto security, and security is, of course, a big factor in investing in crypto. And BitGo is offering an incredible incentive as they launch this platform where you can get a chance to win Bitcoin. They're giving away at least one Bitcoin every quarter. So if you sign up and have funds on the platform through the last day of each quarter, starting December 31st, 2024, you can be eligible to win some free Bitcoin here. So if you'd like to learn more about BitGo, go to bitgo.com. Link will be in the description. Hey, everybody, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and my guest today is Cosmo Jiang, who's the general partner at Pantera Capital. Cosmo, great to have you on.
Hey, thanks so much for having me, Tony. Happy to be here.
Cosmo, you're, of course, at Pantera, which is one of the OG firms in this space, headed up by Dan Morehead. And you guys have such an incredible pedigree of investing in Bitcoin and the crypto market. So I certainly want to get your insights and perspectives. And you also have, background beyond that in the crypto space. So let's start with your background, where you're from and what's your professional background.
Yeah, for sure. Well, I grew up in California, in Northern California, and then spent most of my adult life, I guess, in New York. Yeah, I'd say I have a pretty traditional finance background or trying a TradFi background. I went to school, graduated from Harvard, and then went into investment banking, doing M&A at Evercore, did a few years of private equity at Apollo, and then spent most of my career actually doing long short equity. So, hedge fund doing public equities investing. My style of investing that I've been trained in or learned from has always been really long-term oriented, growth oriented, trying to find high quality businesses that you really want to own for a long time in primarily consumer and internet. Um, and so, sort of as I slowly made my way into crypto was, I'd say I'm like not one of the serious OGs like we have a lot here at Pantera. I'm more of a newcomer in the sense that I've owned, Bitcoin and Ethereum for many years, but it wasn't really ever relevant for me or my day job, if you will, until, call it 2021 when all of a sudden everyone in my coverage universe started talking about crypto. And so just to give you a sense, my job as a hedge fund analyst is to really understand and get to know all the companies across consumer and internet. And when all of a sudden guys like Facebook or Spotify or Universal Music or Nike or LVMH, companies I know very well and been covering for many years, started talking about Web3 and NFTs, all of a sudden it was like, wow, something's going on here. I should really like figure that out. And as I did, I discovered that wow, there are real businesses. There's like a lot of activity going on, and there's real opportunity to use fundamental investing to really start looking at these assets, just like I did, stocks at a public equities hedge fund. And so, um, the short of it is, soon thereafter, I decided I'd always knew that I wanted to launch my own fund. I always thought it would be an equities fund. And then I realized that, wow, there's a real opportunity to do this in digital assets. And so I launched my own fund, managing crypto. with that same sort of mentality, that very TradFi fundamental value approach. And then soon thereafter, was talking to the guys here at Pantera, and we decided it made sense to join forces and really, accelerate our collective growth. And so, folded my fund into Pantera, and now I'm here managing our public facing, our liquid token strategies.
Oh, that's awesome. Are there any similarities to what you used to do in TradFi and what you're doing now as it relates to the assets and the trading of those assets?
Yeah, totally. I think I'd say crypto is very diverse, so there are lots of different types of assets. I think as an investor, you're supposed to pick and choose where you want to play. One of the lessons I've learned over time, and many people realize as they become investors, is that like every pitch you hear is going to be great, and like there's thousands of things out there that sound interesting. And so maybe actually the hardest part of the job is really filtering for return on time and where you're going to get the highest ROI on your investment on your research time. And so as I thought about that, it's like, man, even in crypto, there's thousands of tokens, but really like for me, I'm trying to find high quality protocols that I think have great management teams or founders that ultimately have tokens that can generate value or have a reason to exist and thrive over the long term. And if you narrow down that universe, it's actually a little bit smaller. It's certainly not thousands. It's maybe tens to hundreds of tokens.
Sure.
And so that's where I spend my time. And because of that sort of like investor lens I bring, everything I do is almost exactly the same as what I did in TradFi, covering equities. It's like it's all the same types of analysis, which is this a good business? Like, does it have a competitive moat? Like, why should it exist? Does it have a product people care about? Is the management team trustworthy? Can you talk to them? And then ultimately, like, does any of that value come back to me, the token holder?
Mm.
And how does it come back to me? And so a lot of that sort of like core investment analysis is all the same. I think the tools are maybe slightly different. The information is a little more scarce. It's not as easily formatted or easily accessible as it was in traditional finance because the data providers aren't there yet. But the core of what we do is actually almost exactly the same.
That's very insightful. And I'm assuming, like you said, some of the data points are not there, but you have the benefit of on-chain data where you can maybe see a bit more on certain fronts.
Yeah, that's exactly right. I think it's really great. Something that's even more transparent about investing in blockchain actually is that you have more data. In equity land or in stocks land, you get quarterly reports, and then if you're a hedge fund investor, perhaps you're buying credit card data or receipt data, which I would do. But like even that would be not really real time, sort of like
Hmm.
maybe you're getting weekly updates, but even then, that's not really the revenue of the business. It's sort of you have to make your own estimation based on incomplete data. The beauty of on-chain data is that everything's transparent,
Hmm.
right? I can see for the businesses or protocols we're invested in how much money they're making block by block. That's pretty wild.
Wow.
And that's what makes it so much this actually a very data rich place to invest and also just an exciting place to explore.
That's fascinating. Would you mind telling us what type of tools you use to do your analysis with the on-chain data?
Yeah. So we tend to use a combination of both third-party service providers as well as our own proprietary data sets.
Hmm.
As far as third-party service providers that we really like, just for price data, I use Bloomberg, I use TradingView, and then for on-chain data, we are really big fans of the guys at Artemis. I think they do a really great job cleaning up on-chain data. The guys at Token Terminal also do a great job really focusing on fundamental data. As well as, Dune is really helpful for producing some dashboards. And then some of the other guys that we use are, DeFi Llama,
Hmm.
Flipside, and amongst others are sort of that's those are the core of what we look for in third party data.
Hmm. Now, your background in TradFi and then you making that journey to come to crypto, but it seems like all of the TradFi herd, so to speak, is coming in. I mean, you have the biggest names on Wall Street launching ETFs. Tokenization, of course, is a massive movement among these firms. What are your thoughts on how the crypto has this gravitational pull pulling in TradFi?
Yeah, I think it really speaks to the stage of maturity this industry is in. Like going back to why I decided the industry made sense for me to join in 2021, it was like what I'm looking for and what people of with similar backgrounds from TradFi are looking for. They're looking for blockchain protocol solutions that actually deliver real value, right? And that deliver real value, that have products that make sense, products that people are willing to pay for, and ultimately business models that we can like grasp our hands around and really underwrite and invest in. And I'd say prior to 2021, that was not super clear where those businesses were. There are plenty of exchanges and plenty of like sort of centralized Web 2.5 companies that made a lot of money, but there weren't really any protocols that made money until really the DeFi boom and the flux of everything that came after that. And so arguably pre-2021, there was no reason for TradFi to come because there were no products, right? There were no protocols that actually made sense. Um, but now there are, which is really exciting, and that's why there's all this excitement and innovation. And then of course there's Bitcoin, which has just had this very long journey of starting as the beauty about Bitcoin is its investment thesis has never changed, right? It started as digital censorship resistant money, and today it is still digital censorship resistant money. The thing that's changed, it's gone from what was tens of users to hundreds of users to thousands of users to hundreds of millions of users today. And really it's that story of consistent penetration that's given it more credibility and therefore also more staying power, and that's also attracted the traditional finance crowd.
Oh, for sure. Now, talk to us a bit about Pantera and some of the tokens and projects you guys are invested in and what you're looking for maybe this year.
Yeah. Um, at Pantera, we're one of the more established and sort of longest standing institutional investor in crypto, and so we tend to see a lot of stuff, and we definitely invest across a lot of spaces, whether that's everything from centralized financial counterparts like the exchanges, like financial like fiat on ramps, off ramps, stablecoin transfer companies, custody service providers all the way onto on-chain businesses, right? Such as in DeFi, L1s, DePin, AI. And so we really span the gamut. I'd say different people on the team have different areas of focus and where they really enjoy spending their time. At a very high level, the places where we're spending the most time is certainly still around some of this key infrastructure and some of these on-ramps and off-ramps. So, the infrastructure to make sure that people can actually get their money onto crypto rails or get their money off of crypto rails. Even today, that's not that's still somewhat non-trivial for a lot of people. So that's continuing to be a huge area of focus. It's like increasing adoption, making it easier for people to on-ramp, off-ramp, whether that's wallets or payments. Um, that's one big area. And then there's like on-chain infrastructure. So that's the L1s. There's continues to be a lot of really interesting, up and coming L1s or L0 type things that we think are interesting. But as well as even the large established chains, we think, like a Bitcoin, like Ethereum, like a Solana, like a ton, we think these are chains that have been around for a long time. But man, they have, if we're correct about crypto going from tens of millions of users to billions over time, there's so much more growth and upside, even in those quote unquote large cap tokens. Right. And so we're spending certainly a lot of time there. And then, like I said, DeFi, all these DeFi protocols that are highly revenue generating today and really great businesses, as well as sort of our more, what I call the more speculative or further out stuff like DePin and AI, like that's just massive, massive focus, especially for me.
Oh, for sure. Now you mentioned Ethereum and Solana. We've seen obviously competition heating up in the market, which is good, right? And Ethereum, despite its challenges, and you have all these layer twos on top of it, it's still getting a lot of enterprise adoption. I still see BlackRock starting with Ethereum for tokenizing their money market fund. But Solana has been getting a lot of transaction volume, a lot of folks building on it. A lot of it, though, seems to be meme coins. Not all of it, but some, a good majority. What are your thoughts between the dynamic of both? Will one be the clear leader for enterprise and the other one more for retail? Can they coexist together?
Yeah. Well, I guess to start, I'd say I really do believe we will be in a multi-chain world. And at the end of the day, the consumer really, or the user, or the end user really doesn't want to know or doesn't care if they're using Solana or Ethereum or Ethereum L2. They just want to know that they're accessing a product that works for them and delivers what they're looking to get. And so it totally makes sense that eventually, just like with mobile operating systems, there's Android, there's Apple, or just like with desktop OSs, there's Windows, there's Mac. Like there's going to be multiple operating systems for which people to interact with blockchain.
Mm.
It's just like no one actually does take over everything. Now, there are major benefits to scale, and so it's not like there's going to be a long tail of these, but a few certainly. And so for sure, I believe Ethereum, Solana, Bitcoin can certainly coexist, and also maybe overlapping even use cases, right? Just like your Mac and a Mac or a Windows PC can do the exact same thing, but different applications live on both, and different people use both.
Yeah.
Um, yeah. I think like as far as the where we're seeing activity, I'd say like I mean to that last point, we're seeing very some like we're seeing both DeFi and meme coin activity on Solana. Just like on ETH, we see DeFi and a little bit of meme coin activity. And so I think it like everything sort of exists everywhere. It does just so happen that over the last year, because Solana has really proven itself with its what I call the better, faster, cheaper mentality. It's really succeeded or really succeeded in gaining a lot of the incremental growth in the industry.
Mm.
Um, that like we're seeing a lot of activity there, but certainly Ethereum has its place.
Oh, for sure. I'm curious, does Pantera have any interest in meme coins? Are you guys looking at maybe the more established ones, right? I want to make sure I delineate between the established brands and communities like Doge
Yeah.
versus a meme coin that was started last week on Pump Fun or whatever it may be. How are you guys approaching this market, and what are your thoughts on how the meme coin market has kind of gotten a lot of attention over the past year, but it's kind of died down since?
Yeah, for sure. Let me caveat this with I am like very open-minded. Like as an investor, it's super important to have strong convictions but lightly held and like, change at the facts change. I would say my bias and certainly our bias as an institutional investor with large institutional LPs is I'm interested in finding businesses I can really underwrite and feel high conviction in owning over a long period of time. And meme coins, they're very fun, but they're more like speculative gambling and not without a basis in like real value. And so it's just harder for us to underwrite, and certainly not my style of investing. Or sorry, not my style of thing to invest in. And
Mm.
so, meme coin speculation trading, like for sure has a place. I think it has a lot of staying power. And in a lot of ways, you've seen some of those meme coins really evolve. Like Doge has built a real community. It's used for payments in some cases. The Bonk has developed a real community around airdrops and other like benefits for being part of the Bonk community that actually do provide value. And so, in some ways, some of these meme coins can evolve into these value attaining or value accruing tokens. But for us, we're very focused on fundamental value. And so, meme coins fall outside of that, right? They're like more fun and more for speculation. Um, I think like as far as I think the meme coin growth is really indicative of a larger societal trend towards the hyper financialization of a lot of things and
Mm.
this idea of gambling as a form of entertainment. It's not limited to crypto. You see that in sports gaming, right?
Oh yeah.
Sports books and online sports gambling has grown massively over the last few years. It's sort of that same wave or that same mentality of like the hyper financialization of fun. And by the way, if you go back to caveman days, actually gambling has been around forever, right? Gambling is actually very intrinsic to human nature,
Yeah.
and people were throwing bones, like animal bones, to like gamble with each other back in the day. And today just so happens to be meme coin trading. It's like the evolved form. As an investor, I've invested in gambling businesses for a long time in my career, like businesses like Wynn or Las Vegas Sands or MGM. Like these are great businesses, right? People walk in. People always say like again, a casino is just like a box that you walk in, and people walk out with less money. And so again, the casino is like a great place to be. And so taking that analogy further, it's like I'm fully at peace with and think gambling is going to be around forever. Meme coin is a new form of gambling, and that's fine. A lot of people have fun doing it. I'm like not morally opposed to that by any means,
Mm.
and like fully recognize that it's been around for thousands of years, so it's probably going to be around for a little longer. And but by the way, Pantera as an institution, me, Cosmo as an investor, I don't have to invest in the actual I don't have to be investing. I don't have to be the guy at the blackjack table. I don't have to invest in the blackjack player. Why don't I just invest in the casino? Right.
Yeah.
And those are great businesses. And so that's why we love the financial rails on which a lot of this exists. Like, I truly believe Solana and Ethereum will serve a lot more use cases than just gambling and just meme coin speculation. But certainly they do serve that use case, and it's a great place to be investing.
Yeah, great point. And to your point, you just invest in the underlying protocol where the rails essentially where these things are being built.
Right.
Um,
Yeah.
and
Don't you
then
want to be
to
the house? It's like invest in the house.
yeah,
Yeah.
for sure. And then you mentioned this is all human behavior and psychology playing out. We haven't changed, right? Inherently, we're speculative beings and all that. So it's the same
Yeah.
thing over and over, just different technology.
That's right. In fact, it's like so intrinsic to human behavior. We wouldn't be here today if we weren't risk-seeking animals, right?
Yeah.
If the original first, I mean, there's no first human, but proverbial first human, if he didn't look over the horizon to find like the next thing to like explore the next country or the next plot of land, humans wouldn't exist as we do today. So it's actually very, very core to our nature that we love speculation, and that's why gambling is not something that's going away. Like
Right.
for sure, meme coins like trading has gone down a little bit over the last couple of months. But man, this is a very short-term cyclical thing. Humans, as I've learned, are like quick to forgive and forget. And I'm sure people will be back to some form of on-chain trading speculation soon enough.
Yeah, for sure. And you just look at Polymarket and everything that's going on there. Anything is being put up as a bet, which way
Right.
direction's going to go.
Humans are just curious people and they like taking risks. Yeah.
Yeah, it's so funny. Um, I want to get your thoughts on the market because we've seen a bit of a sell-off in a bit of a corrective phase. Some of it from macro pressures with tariff wars and the uncertainty around all those things. How are you and the folks at Pantera looking at this? Is this just a bump in the road in the larger macro bull market?
Yeah. When I think about the market, I try to think about things from both like a high time frame, meaning like a longer term, a medium term, and a short term view. And I'd say for most people, the focus should always be on the really long term. And what is the really long term? Well, I think blockchain is going to be a massively disruptive technology. We're going to go from what is only tens of millions of users today to billions over time. And so along the way, you have this massive growth in fundamentals. And if you're there, you are going to benefit from that. And then by the way, like in the medium time, on a medium time frame, so I'm very bullish on a longer time frame. On a medium time frame, meaning, 12 months, 24 months, something like that, I'm also very, very positive, right? If we think about what just happened, man, this is totally a story of headwinds becoming tailwinds this year. Like whether, and especially with regards to regulatory, this U.S. political inflection has been something totally tremendous and continues to be underestimated. How big of a deal it is that the U.S. is now open for business effectively for crypto, whereas it wasn't before.
Hmm.
And so on a medium time frame basis, I'm like, man, all these regulatory political tailwinds, and then the larger macro tailwind, I think is absolutely there for crypto to succeed over the medium term. I think from a short-term perspective, there's this concept that investors like to call the wall of worry. It's like there's always reasons to be like concerned about things in the near term. It always feels like your hair's on fire. I think every year people say this is like the worst year for humanity, but like people have been saying that if you read history books for thousands of years, and so like actually it never is. And so, but like that's this concept of this wall of worry that ultimately has to be climbed in order for the markets to go up. And in fact, the higher the wall of worry, certainly the more choppy markets are in the interim, but the higher that, the better that sets a base for really markets to continue going. And so I think your question is like, what's driving this wall of worry? And like, how we're navigating that. It's like, look, as active managers, we have a number of different strategies. We have our venture strategies, which are very long-term focused, and we remain very eyes on the prize of where is the big business is being created, and we're going to keep investing in those no matter the market dynamic today. And then we have our shorter time frame, but still relatively long-term hedge fund products that are thinking about, hey, what is like over the next year, we want to deliver strong risk-adjusted returns for our investors. Like, should we be modulating our exposure in the interim? And I'd say from that perspective, like, yeah, clearly there's some choppiness in the market. And I'd say the choppiness is really not crypto specific. It's more macro related. And the fact is that, crypto is part of the larger economy. So obviously, if equities are tanking, crypto is going to tank too. It's just very natural. And the reason why equities are tanking is, well, I mean, look, there were very high expectations when Trump came into office that he'd have a pro-regulatory, a pro-business and deregulatory mindset. I think all those are true. I think the flip side is that also a lot of people always knew that he's the most volatile, unpredictable guy too, and he prides himself on that. And as a result, we went from I almost say like sense of complacency right after the election to now realizing that wait a minute, we get like both the goods and bads. And so we're getting a little bit of this volatility now with his like back and forth on tariffs, which, if whether or not he rescinds them, which I fully expect that he'll, take his tariffs back eventually, but only after our counterparties really feel real pain and he gets what he wants, which is like really beneficial to the U.S. economy long term, but going to be that could be really painful near term. So like we're going to this tariff issue, and then obviously Doge is going on, which is also, I think, really, really good for us long term in terms of cutting costs and being efficient, but really painful in near term because 25% of US GDP is government spending, 25% of new jobs are government jobs. And if there's any shortage of that, or if there's any cutting back of that, that really hurts the economy in the near term. And so we're entering this phase where now everyone is asking about stagflation, right? The idea that we're about growth is about to slow down because of tariffs, because of Doge, and at the same time, prices are going to start going up again because of tariffs and because of tariffs. And so the market is very worried about stagflation right now. I think it's very likely though that we start. I don't know how long this lasts, and we're probably in for some period of choppiness, whether it's weeks or probably even months. But the reality is that we're all economic creatures. I think Trump and the administration really, at least their base case plan, I believe, is to, feel just enough pain so that everyone feels more pain than us, than the US. And then we flip back and like turn everything back on.
Mm.
And probably at the same time, the Fed will feel enough pain where they feel like they have to pivot and cut rates. And so all that should probably coalesce into a much stronger back half of this year. Before that, we maybe see some choppiness before we get those really positive catalysts.
Oh, for sure. And then you mentioned, the United States open for business. Obviously, we got the most pro-crypto Congress ever. We have a pro-crypto president. The Treasury Secretary is pro-crypto. The SEC is back in a more favorable approach to crypto. So with all these things in place, and then with Trump last week signed the executive order to create a Bitcoin reserve, digital stockpile, um, are you seeing, more demand as a fund of people saying, "Hey, we're ready to do business. We want to get involved because we don't have to worry anymore."
Yeah. I think there's two sets of people there that I think it's worth answering that question for. I think uh, one is from the entrepreneur mindset. So I think something that a lot of people don't appreciate over the last couple of years. We're a large venture firm. We have a large network of entrepreneurs that always come to us and are seeking advice. And something that really popped up over the last couple of years, a question that popped up that wasn't asked before hey, I'm XYZ person. I really want to build this blockchain protocol because I think it can do a lot of good for the world. But do you think I need to move outside the US? I'm afraid of getting sued, which is crazy, right? That people would have that mindset. I've had a personal friend move his wife and young son to Singapore because he was like, I have to start this protocol, but I don't think I can do it here. I'm afraid. So I'm going to move me and my family to Singapore, right? That is crazy. And and that stops now because now it is finally again sort of more favorable that people don't feel the stress of sort of like unknown regulation coming after you, the boogeyman of not knowing where you're going to footfall. And so that's just such a huge deal. It's a huge sigh of relief. Imagine for the entrepreneurs who want to start businesses, and many of them are here in the US. It's like, and we're actually now starting to hear the reverse, where actually there are many teams across the world that are saying, hey, like we came from the US, maybe it's time to come home. Like what a great feeling, or what a great thing to say.
Mm.
And then it's not just entrepreneurs that build businesses. It's employees, it's developers, and all of them. Imagine you're a 22-year-old kid graduating from Stanford. And like you kind of want to join a crypto company or a not crypto company. You're like, what am I going to tell my parents if I join a crypto company? Like, so like obviously join the other one. Today, that's no longer a question, right? What a relief that now there's the talent can come into the industry. And so for sure, from the business formation, from the availability of capital, like, wow, that is so much better today. The US is truly open for business. And then the other side, so that's like the developers and the businesses. I think from the capital side, it's also very clear. I mean, we saw that with the Bitcoin ETFs last year,
Yeah.
right? The Bitcoin ETFs, these were the most successful ETF launches in history, bar none. For context, they brought in over $30 billion last year. That's more money than the NASDAQ brought in. The NASDAQ ETF, QQQ, brought in. Bitcoin ETFs were more than the second largest index in the world, the NASDAQ. That's crazy to me. And it just speaks to the large pent-up demand there is for crypto. And as we enter this year, like crypto is more than just Bitcoin. We sort of view the world as there's Bitcoin and then there's also everything else, which is blockchain the technology. And we're seeing all this tremendous demand now for blockchain the technology as well. And we're seeing that in sort of a lot of discussions we're having with large allocators. I spend a lot of my time certainly talking to our existing investors, which are a lot of family offices, high net worth individuals, but also spending a lot of time talking to and the few endowments that we are fortunate to count as our LPs. And I spend a lot of my time talking to the endowments and institutions that aren't quite in yet. And it's like the tone of conversation is totally different
Mm.
today versus last year. Last year, it was very much like, hey, I'm personally interested in crypto. I'm not sure if my boss is interested in crypto. If I bring up crypto, I feel like it's kind of risky. And so like, it's really cool, but like maybe come back to me later, I'll let you know. And so like last year it was like it almost felt like it was risky to bring up crypto.
Sure.
This year, I would argue it's risky to not bring up crypto. If you are not bringing up crypto at an institution to your boss, you are actually being irresponsible and not doing your job anymore because everyone is talking about it and you can't afford not to ignore it. So we went from like you kind of scared to and you kind of wanted to ignore it to now like no way you can ignore it. That's a huge, huge difference.
Oh, for sure. I can only imagine. And, many of these folks have the fiduciary duty, right?
Right.
Yeah. So,
Right. Last year it felt like it was their fiduciary duty to like they could maybe ignore crypto. This year it's their fiduciary duty to bring it up.
hmm. You mentioned the Bitcoin ETFs and it was so successful, blowing records out of the water. And there's on the table right now, like staking being added to Ethereum ETFs. We see a bunch of filers trying to get this from the SEC, but also other altcoin ETFs like Solana, XRP, HBAR, I believe, Litecoin. So with the SEC, once again, approaching this asset class differently, do you anticipate those are going to get added this year?
Yeah. So certainly myself and my team spends a lot of time thinking about policy. I talk to a lot of people on the Hill, and I think it's very clear that crypto voters made a statement last election. Let's start there.
Yeah.
If you look at the margin of victory in the U.S. election, it was call it a point or half a point of or one percent-ish of the U.S. population for the win of the popular vote. In a lot of ways, the crypto industry can argue that it was the swing vote because there have been surveys done on crypto voters and there are about 20 million crypto voters in the US and or sorry there are about 20 million people that said they were crypto voters and about 5 million people said they were single issue crypto voters like crypto was going to be the topic that flipped them
Hmm.
and that's way larger than the margin of victory of the popular vote so and look it really made an impact if you look at the crypto pack the Crypto Political Action Committee that donated to a lot of these races, almost every single race that the crypto industry supported won their race, and almost every legislature that said they were anti-crypto lost their race. And so today in Congress, more than half of the House of Representatives is explicitly pro-crypto, and more than half of the newly elected senators is explicitly pro-crypto. So there is massive bicameral, or in other words, both sides of the House, and bipartisan, both Republicans and Democrats, very, very focused on making sure we've developed structural right legislation that allows crypto to thrive and survive in the US. So that's super, super exciting. And so when we get to like, how I think about securities regulation, certainly the SEC plays a very large part in this. And that the people that are in charge of the SEC are also very pro crypto now, and so they understand the that perhaps they were a little aggressive in how they regulated or went after crypto companies in the last few years, and today it's taking a much more pro innovation, pro business approach, which is really great for crypto companies and for to directly answer your question, for new crypto asset listings. So I fully expect this idea of regulating whether tokens are securities or commodities or maybe even something in between. I think the SEC is highly focused on that single question is sort of their top priority right now, actually. So it's really great to see that amongst all the other things in the world they could be thinking about, they're actually thinking about crypto first in the
Yeah.
priority list. And they have their next big meeting with a lot of crypto industry participants is going to be March 21st, which is sometime next week. And I expect there to be a lot of news come out of that, and that specifically is around token regulation and how we classify tokens. So I expect to see probably a lot more clarity around how everyone's thinking about it, and maybe the framework for how people are thinking about it, which certainly enables the eventual listing and launch of many new token listings.
Oh, for sure. Yeah. So that roundtable coming up, and then they've been dropping a lot of the crazy or frivolous cases, like against
Yeah.
Coinbase, Kraken, which is great, dismissing a lot of the Wells notices and so forth. And then the other part of the puzzle to this is Congress getting stablecoin and market structure legislation through. Are you also anticipating that gets through this year?
Yeah, exactly. I think uh like I said, crypto has it's sort of it's this weird thing where all of a sudden people in crypto have always known this, and the light bulb only switched recently for politicians. But being anti-crypto is not a vote-winning thing to do, right? Like it doesn't when you go out and say you're anti-crypto, you're not getting someone like really galvanized to go and vote for you. But if you say you're pro-crypto, man, that like crypto can create jobs, can create wealth for people. That gets people going, and so all of a sudden the light bulb switched that like, wait a minute, why be anti-crypto? I'm probably supposed to be pro-crypto. I'm probably supposed to be pro-business, pro-innovation. And so that very logical message is now resonating in addition to the very clear wins created by the industry during the last election, is really resonating with people across party lines, across both the Senate and the House. And so we really have this bicameral, bipartisan push towards legislation for both. And there are two bills that people are really looking for. One is a stablecoin bill, and one is a market structure bill. The stablecoin bill really enshrines, U.S. dollar stablecoins and what they can do for helping banks and financial rails. And then the market structure bill is supposed to enshrine or really help us understand how tokens should be regulated, the disclosures that should be disclosure, the vesting schedules that people should know about around crypto. I'm for like legislation that protects users for sure. And like a lot of that is really important. That's going to come from the market structure bill. And and both those things, I think, are on track to be some of the fastest pieces of legislation ever written and gone through. Trump has sort of set this deadline of the August recess. As many people go on summer vacation, so does Congress. They go on vacation in mid-August. He set that deadline for them to all get their ducks in a row and get legislation passed before then. So, knock on wood, it seems like things are on track to happen.
Oh, for sure. And then, the stablecoin component, we see that market is booming. A lot of new stablecoin issuers, whether it be PayPal, Ripple, I mean, obviously you got Circle and Tether. But it seems like that market is primed to explode because also with the repeal of SOB 121 and the
Yeah.
FDIC loosening up restrictions, we got banks talking about it. I think Bank of America's CEO just a couple of weeks ago said, once the legislation's there, we're going to launch our own stablecoin. Do you see maybe by the end of the year, this stablecoin market could be $1 trillion, market cap wise.
Yeah. I mean, it's hard for me to say the end of the year because things are accelerating so fast. But yeah, $1 trillion sounds so far from 200 and so. But man, things are accelerating really fast. So you never know, right? I come from, like I said at the beginning of this conversation, I come from the Web 2 world. Like I spent all my life covering covering internet stocks, fintech stocks. And from their perspective, man, all of them are super excited about stablecoins can do for their business. Like stablecoins are the most obvious, like best innovation, the most obvious innovation to adopt that's come out of blockchain. And there's so many use cases, whether it's like the case that everyone's sort of very familiar with, which is remitting money back and forth to other countries. It's
Mm.
the other use case that sort of is unappreciated in the US, which is a lot of people outside the US want to store their savings in dollars. Man,
Right.
stablecoins are a really great way to do that. And then we're now seeing it in corporates and enterprises. I mean, large businesses. Imagine you're Coca-Cola and you sell Coke in both Europe and China and the US, and eventually that cash doesn't make it to the US, but you've got bills to pay in Europe and China, and so you've got to keep cash in all these places, and it's really cumbersome to deliver the cash around the world. Man, over bank wires. Man, with stablecoins, it's instant. All of a sudden, it's like way easier if you're a multinational business to run your business, right? And so it's massively, massively, massively game changing. So I'd expect huge growth in stablecoins through the end of the year for sure. And like I don't know if it's trillion this year, but certainly a trillion at some point, and 5, 10 trillion at some point thereafter.
Oh, for sure. And then, you have the geopolitical component of US dollar being the world reserve currency. Scott Bessent, I think just the other day, was talking about stablecoins will help to preserve that
Yeah.
status, especially as a lot of these stablecoin issuers are backing with US treasuries. And then, the whole BRICS thing and countries trying to go be, outside of US dollar. So this big geopolitical thing happening here, and the stablecoin, dollar-backed stablecoins seem to be there's some level of urgency here to get this done.
Yeah, that's exactly right. I think it's really great that the industry's message has really started to resonate, which is that the 99% of stablecoins are US dollar stablecoins. And so like there used to be this argument that crypto is bad for the US dollar, but the reality is actually it's only increased the US dollar's influence and power in the world. When people quote Bitcoin prices, they quote it in dollars. They don't quote it in their local currency. And
Right.
so it's just like crypto as an industry has been hugely, hugely beneficial to the US. So it's sort of like this weird twilight zone that we came out of where the US was not as pro crypto, even though crypto was doing so much to help the US. And so now we're finally seeing that align. And for sure, the US dollar is very obviously benefited by the growth of stablecoins.
Mm. Now you mentioned some of the other sectors that you guys are looking
Yeah.
at, like DePin, AI, and crypto. Um, talk to us a bit about DePin and what are some of the projects you're looking at, and when do you see there might be a tipping point when that takes off? Because I really love the idea of DePin and what the use cases like connecting the digital world to the physical world. But it seems we haven't got much traction. Not saying we won't, but it may take time.
Yeah. Let me start with why DePIN matters,
Mhm.
I think. The reason why as we think about, blockchain protocols, I think a common pushback I get from lay people, which is totally fair, is man, blockchain's been around for a while, but like I don't see it in my everyday life. Like, why should I care, right? Or when institutional allocators and large investors are coming and looking at this, there's like, well, like, where's the use case, right? Where's the tangible use case? Where's the value in that we can see in our everyday lives? I think that's why DePIN is so exciting because it encompasses a very DePIN is kind of like a weird category because it encompasses almost everything, but like it's this category that encompasses everything where blockchain touches the physical world. And there's actually great examples of businesses that are formed as tokens, but are actually now delivering real value to real companies in the real world. And so I think there are a couple really great examples of this we can walk through. The first I'd really emphasize is this company called HiveMapper.
Mhm.
Um, HiveMapper you should think of as a Google Street View effectively, but built on but better and more real time.
Right.
So you know how Google Street View they map the world around them. They have this guy who drives a car and maybe maps the street like once or twice a year. Like kind of cool. You can like click on a human on Google Maps and see your house and see things around. But the reality is that's like pretty expensive to do. Like this guy in this car costs about $400,000 a year to keep running. At best, they can really only cover your street if you're lucky a few times a year, once in a lot of only one time a year in a lot of places. And so it's like not super efficient, but clearly a really good service. HiveMapper's thought was, wait a minute, the superpower of crypto is really using tokens to coordinate a lot of different people, right? This decentralized sense of a group of actors that otherwise wouldn't work with each other can work with each other because of the power of tokens. And what if we use that to instead of hiring our own driver, buying our own car, how about the Uber drivers out on the street? How about the UPS drivers out on the street? What if they just mapped the data instead, contributed to a protocol, and like these guys are out there every day, multiple times a day, So we're going to get actually a much more real-time picture of the world, a much more real-time map than Google can provide by a lot. And maybe we can do it even faster and certainly a lot cheaper
Yeah.
because it sort of coasts along this idea of the gig economy where, these guys are already out there anyway. Pay a little money, install a dash cam, and make money for doing it. Why not? Right? It's like zero sweat off your back. And so it's this beautiful instantiation of crypto really leveraging the power of the community and tokens to coordinate a real product that is competitive with Google. And so what we're seeing today is indeed over the last 2 years, HiveMapper has actually mapped 31% of the world's unique kilometers. Like 31% of the world, not just the US. Like 100% of the US and 31% of the whole world's roads have been mapped by HiveMapper. And they're
Mm.
doing it in a much more real-time fashion, like multiple times a day versus Google once or twice a year. So they've now developed a much higher fidelity, higher quality data set than Google could. And lo and behold, they're now starting to sell that data to very large tech companies. They can't disclose who they are, but they sort of hinted at, think of large ride sharing companies, large, massive mega cap tech companies that compete with Google. They're all now starting to buy HiveMapper data because they realize that actually this crypto protocol is delivering a way better service at a way better price than the Web2 equivalent. That is so amazing.
Do you think Google, as they dive deeper into Web3 and crypto and blockchain, will like try to acquire a Hive mapper? Like, hey, this is stealing our lunch, but we already have a Web2 version of it. Let's get this and plug it in and make our product better.
Yeah, I think you never know, right? Because it truly is a much better product. I think the more likely scenario is maybe Google just ends up using HiveMapper, right? HiveMapper is a decentralized protocol. Anyone can tap into the data as long as you pay for it. And man, HiveMapper is such a huge lead in creating this like decentralized map. Why doesn't Google just augment their Google Maps with this data? That would be amazing. And there's certainly a future where I could see that happen. All their competitors are doing it. So, yeah.
Yeah, for sure. Yeah, I mean, I love the whole DePin aspect and just see so many possibilities. And like you said, in the gig economy and people being able to earn in different ways,
Yeah.
especially as look, I mean, you look at the overall economy changing with the infusion of AI and robotics. And I'm not saying it's going to happen overnight, but we've seen these things before. There's usually a dip in jobs, right? When the tractor came along, a lot of people in farms lost their jobs, but that technology eventually created new jobs. But there's a lag, there's a time period, and it'll be interesting to see how people can earn in different ways.
Yeah, that's right. I think that's what's so beautiful is that whoever's listening to this, or you yourself, Tony, and me, we can install HiveMapper B devices in our cars today and start earning for just driving around the world,
Mm.
right? And like going through our normal daily motion and benefit by contributing our data that we're already passively collecting to this beautiful crypto protocol, and really like create value for other people and get compensated yourself for doing that.
Mm. Yeah, it's fascinating. And then I just think about the different ways people can get rewarded for just doing what they're doing. Like you're saying, like driving through their city and whatever, earning tokens. But in I don't know. I think Helium and mobile, that's another one,
Yeah.
right?
Yeah. Helium. I have a Helium device myself. It's set up in my home, and Helium is also a great example of that. It's like these large or these large telecom companies. Sorry, they've spent tens of billions of dollars building out fiber optic networks and radio towers to project cell service. Helium's really elegant solution was like, wait a minute, everyone at home has a Wi-Fi connection or can create a Wi-Fi connection from their home cable. Why don't they share that with the world? Like how much faster and how much more connectivity could we have if everyone shared their Wi-Fi? And then, by the way, for sharing your Wi-Fi, you get paid in for the service you're providing in tokens. And lo and behold, wow, like Helium is now starting to see real usage. In fact, AT&T and T-Mobile, think about it, these are large US companies have decided that, wait a minute, Helium is providing a service that's actually augments what we do. And so AT&T T-Mobile have started paying Helium for their service. So like
Wow.
when I say, like a lot of people like to say that, DePin, like I don't see crypto in the real world, like there's not a lot of real use cases. Man, I'm telling you, there are There are many, many Fortune 500 companies that are paying real US dollars to crypto protocols. They're paying crypto protocols because these crypto protocols are providing real value and real service.
That's amazing. I love it because you don't usually hear, to your point, right? You don't hear a lot of these stories out there of these things happening. And even I don't know how many people listening or watching this, eventually will they know about High Mapper or Helium, right? But hopefully they can learn about it and go out and start using these things and earn and be early adopters.
That's right. That's right.
Um, Final question here before I let you go. Um, United States creating a Bitcoin reserve, right? I know Dan Morehead and Pantera have been early adopters of Bitcoin, buying Bitcoin very early. How do you guys feel about this? And do you see a global FOMO for Bitcoin from nation states and countries and much more?
Yeah, oh man, I feel like it's so great and it makes so much sense. It really capstones this administration's view and our view that Bitcoin really is a unique asset and a unique store of value and deserves its place as that. And so seeing the US government say that they are creating this Bitcoin strategic reserve and at the very least not selling the existing Bitcoin they already held is really good. I think it really really makes Bitcoin stand on its own. I think we're already starting to see a lot of US states follow them in their wake, right? There are 24 states that have bills that are currently being debated to establish state Bitcoin reserves.
Mm.
And then as we move outside the US, man, to the extent that the US really starts actually actively buying, which is kind of a question mark, but like certainly they have some tools they can pull to do that. If the US actually starts buying, oh man, the follow-on effect is going to be pretty overwhelming. Certainly we're already starting to see a large number of countries buy Bitcoin, right? The Bhutan very famously has Bitcoin mines and collects Bitcoin. Abu Dhabi, Abu Dhabi, the sovereign wealth fund there, very famously, has bought a lot of Bitcoin through the ETFs and both spot Bitcoin as well. And so it's very clear that already a lot of countries are starting to get ahead of it. But if indeed we do see, and jury's out, but if we do indeed see the U.S. not just hold their Bitcoin but buy more Bitcoin, then I think the impact would be very, very large.
Oh, for sure. Cosmo, I wish we had more time to chat, and we'll probably have to do a round two at a different time. But thank you so much for joining me. And I have some quick wrap-up questions here for you. First is favorite food.
Oh man, I'm a big spicy food eater. And I'd say, I mean, there goes any kind of spicy food really, really hits the spot. But I think it's like those maybe like spicy wing challenges. That's up there. That's up there.
Nice. Favorite musician or band?
Oh man. Well, right now I have a young baby at home, so my favorite band has now become Coco Melon. So that's at least that's what my Spotify Wrapped was just Coco Melon, Coco Melon, Coco Melon, Coco Melon.
I can totally relate because when my daughter was younger, it was Baby Shark, Coco Melon for
Right, exactly.
years.
Yeah.
Favorite movie?
I am man, there's so many. I think like from my one of my favorite tr investing movies, if you will, or one of my favorite trading movies is Trading Places. I highly suggest people watch it. It's hilarious. Um, but yeah, and it gives you great insight into how the street works, and it's just nice and funny too. So I really love that movie.
Nice. Favorite book?
Oh, this is a good one. I think there's so many. I think as an investor, I've been taught to like whenever I invest in a new company, I like go and find if the founder has written a book or if there's something and I go and read that. I think there are a few that really stand out. That are like both fun reads, but also you learn a lot about how business works. I think one is certainly Phil Knight. He wrote Shoe Dog. My God, what an incredible story about the founding of Nike and what it
Mm.
takes, and like the many near deaths that Nike had in its history before becoming the behemoth that we know it as today. I think, another great one, Everything Store, talking about the story of Jeff Bezos and Amazon. And then, one that's a little further out there, but really even more about like self-help is probably like Black Stretchy Pants. And you'll guess it's by the founder of Lululemon, Chip Wilson. And
Yeah.
like that one is also fantastic.
I'm assuming you saw the movie came out a couple years ago, I believe, when Matt Damon and Ben Affleck about the Nike story and the founding of that.
Yes, yeah. Great movie.
It's
Yeah,
great.
yeah, yeah.
Um, And finally, when you're not working at Pantera, what are you doing for fun?
Um, it pains me to when people ask me that because I realize like I enjoy investing so much. My life is really thinking about the markets, talking to other people, and trying to learn more about the world. Because ultimately, being an investor, if I had to boil it down, is I'm very fortunate to have this job, which is just my job is to learn as much as I can about everything in the world and to
Mm.
distill that into views and express those views. And so I really, really love doing that. I'm humbled to be in the position to be allowed to do that, to have capital partners who entrust me with their capital to do that. And so I truly am just like, this sort of like, it goes, harkens back to a Jeff Bezos also quote, which he said, like, there's no such thing as, I don't believe in work-life balance. I believe in like, work-life harmony. And like I believe in like there's no such thing as balance for me because that implies like one sacrifices for the other. I think work and life are both the same to me, and I love investing, being I'm investing, and certainly spending time with with my newborn and wife.
Oh, for sure. Cosmos, great insights from you, man. I appreciate it. Thank you so much for joining me.
Yeah, thanks so much for having me, Tony. This was a lot of fun.